Forget crypto, forget stocks, forget bonds for a minute. Have you heard of commodities? Now, most people focus on these other stuff that are known to grow very quickly. But commodities such as gold, silver, wheat are things that give you stability. They're able to balance out your portfolio and can also help you in times of turmoil in the overall market. So, in this video, I'm going to break down what commodities are. I'm going to give you some examples. I'm going to break down the categories of commodities and, more importantly, how to actually invest in them. So, first of all, what are commodities? Commodities are raw materials that are traded on exchanges in bulk. Examples would be things like gold, silver, aluminium, and you got livestock, coffee, things like that. So they're organized in two main categories. So you got what's known as hard commodities and soft commodities. So the hard commodities are things that are extracted or mined, so things like the gold and the copper and the aluminium, lithium, stuff like that. And the soft commodities are things that you grow or rear. So we're talking livestock, we're talking about crops such as wheat. So those are the two categories. And in terms of sector, they tend to be in either energy, metals, or agriculture. So we've broken those down. So now we know what commodities are. The next question then would be, why would you want to invest in commodities? For one, they're good to diversify your portfolio. So if you got a whole bunch of stocks or a whole bunch of bonds and different mix of assets, the commodities can act as a balance in your portfolio for you. So if all the stocks are down, for example, maybe there's a crash or a pullback, your commodities could help you balance out your portfolio. Secondly, they tend to be things that are needed irrespective of what's going on. A lot of times they are affected by movement in price, so based on demand and supply or geopolitical reasons. But generally speaking, we all need oil, we all need wheat and crops and so on and so forth. So generally speaking, there are things that people would need all year round. So next question is, how do we decide on what to invest in? So this depends on your own particular want or needs. So if you're a person who has knowledge on, say, agriculture, you might want to focus on that sector. Or if you're a person who likes collecting metals like gold and silver and so on and so forth, that might be one for you. So it's down to you to decide on what commodity you want to focus on, or if you want to focus on a bunch of them, and it's down to you to then decide on the amount of exposure you want to them. So for example, you might have a portfolio which is, say, 90% stocks, for example, and say 5% bonds and then 5% commodities, for example. Or you might want to throw in a bit of crypto in there. But those commodities can form part of your portfolio allocations. Okay, so I'm going to jump on my laptop now and I'm going to show you some examples. So one of the things I mentioned initially was things like gold and silver. So I'm going onto my trading platform. In this case, I'm using Trading 212 simply because it's the easiest one and the cheapest one for me. There are tons out there. You can look at Interactive Investor, you can look at AJ Bell, Hargreaves Lansdown. Do your own research, pick whichever one is suitable for you and go with that. My only suggestion would be try get one that's either commission free or as close as possible to free, and something that's easy for you to navigate, so nothing too complex. So for example, if you wanted to invest in gold as a commodity or oil or lithium, you can literally click on search and just type in gold, and this will give you a number of different options. So, or better yet, you can just type in physical gold. So this is the actual gold itself. So you got physical gold there, or if you want to do silver, you got physical silver there. If you want to do, say, lithium, for example, so you can type in lithium, So you got lithium there, and so on and so forth. So you get the idea. If you wanted to do something like wheat, you can also type in wheat. Okay, so you got wheat there. So these are ETNs. So this is a fund that someone's put together for you, and that fund is tracking the performance of the price of wheat in this case. Or if you wanted to do something like, say, coffee, you can just type in coffee, and you can see there's one there that tracks the performance of coffee. Or if you want to track, I don't know, cocoa, and you got cocoa there. So whichever one you want to track, you can just search it in there. Now, if you don't want to track a particular one, and you want something that tracks the overall commodities rather than individual, you can go through an ETF that bundles them together. So if you go on search again, on the left hand side on Trading 212, if you scroll down a bit to the ETF section, you see where it says commodity ETFs. Now an ETF is an asset that bundles together a number of assets together. So you might get ETFs that bundles different types of stocks or different types of bonds. In this case, this is bundling different types of assets. So you can use that as your search, and then just scroll down and look for whichever one you want. So you got natural gases there, you got physical silver, physical gold, you got crude oil, and so on. Palladium, Brent crude oil, platinum. Okay. Alternatively, you can just type in commodities in there. Okay, so with this one, it's just all commodities. So for example, you got this one from Legal and General here, and this is everything included. So it's not focused on just one commodity, it's the full lot. Now, you can jump on my trusted friend, the Just ETF website, and you can type in commodities in there. And search that. So now this gives you different ETFs that are focused on commodities. So as you can see, you got 36 different results. So if you click on that, you can then just have a look at different ones. So you got one there for gold. You got the full commodity, so this got everything in. You got different options, so you can have a look at whichever one you like there. First thing I always do with this is to sort by total expense ratio. So I go from lowest to highest. So you can see this one's only 0.15%. That means for every £10,000 you invest, they will charge you £15 fee for managing the ETF for you, to managing the fund. So the fund manager has to get paid for looking after the fund, making sure that they manage it correctly for you. Once you've sorted by that, you can then sort by fund size. So you want to make sure you don't get something too small, say for example like that one, or something that means that if you go to sell, you might have trouble selling it because there aren't enough people invested in that fund. And then I tend to look at the performance. So you can see that's done particularly well. So you might think to yourself, right, I don't mind paying the extra 15% or 0.15%, sorry, over that one, because I'm getting 7% better performance, or I did. Now, bear in mind that past performance has absolutely nothing to do with future performance. So just because it's performed well over the past year doesn't mean it's going to carry on doing so. So another thing you can look at on the side here, some of them are swap based. So swap means that they're using advanced financial tools versus say physical, where they actually own the actual products. So it's based on physically owning the commodities. So you just need to look in there and pick whichever one is ideal for you. So for the sake of moving the video on, we're going to go with this one. So that's the one that we saw earlier as well. So if you click on it, this website breaks down a little bit more information for you. So as you can see, total expense ratio is 0.15%. So that's quite low. This is accumulating, so they won't be paying out any dividends. So the replication is synthetic. That means that they don't actually hold any commodities. So they just using advanced accounting to replicate the performance. You can see the fund size is 94 million Great British pounds, and it started in July 2017. If you scroll down a little bit more, you can see the performance. So this is the chart of how well it's done. So you can look at 1 day, you can look at 1 month, 3 months, and so on, all the way to the maximum. If you scroll down a little bit more, they tell you a bit more about it. So as opposed to individual commodities, this one is a broad market, so it covers all the commodities. It tells you the index is tracking, so that's a Bloomberg commodity. It tells you that it's long only, which means that you're backing the commodities price to go up. If you went short, that means you're backing against them, so you're betting that they'll go down rather than up. You can see the volatility there, 14.35% in the past 12 months. That's relatively low volatility, so the prices don't move up and down a lot. And you got the domicile, which is Ireland, so that's where the fund is based. And the fund provider is Legal & General, so that's the company that's put together this fund for you. So you can look into the returns here also. So you can see year to date it's 8.1% up. Over the past month it's 5.36%. 3 months it's 10.8%. And you can look as far back as 2021. So from start, when the fund first started, it's 56.45%. So this is a fund that's done fairly well. You can look at the risk there. You can look at the different stock exchanges that it's listed in, and you can look at different alternatives. So we've seen that at the start. So if you wanted to do a comparison, you can do so also. So say for example we're happy with this one, you can just go back in there and you can just type in the ticker symbol. So this is the unique symbol for this, so that's BCOG. So you can see that's the same as that, BCOG. So if it's not there, you can just type it in there, BCOG, and that brings that up. So that's the all commodities one. Or if you wanted the cocoa one, you can just type in cocoa and use that one. And that's one that I'm invested in for the sake of this portfolio. So bear in mind, this is not my main portfolio. This is a portfolio that I created for Roadman Investor to allow me to make videos like this. If you wanted one for, say, crude oil, you can just type in crude, and then you can just go Brent crude there, for example. So regardless of which one you want to go for, so let's say for example we want to go for this Legal & General one, so it's BCOG. You simply go on it like so, and then you look for the buy. Now I'm on a laptop, not on my phone, so the layout might be slightly different, but there will be a buy somewhere. It doesn't matter if it's a different platform, there will be a buy somewhere. So if you click on buy, you'll have 4 different options. So market, limit, stop, or stop limit. For the sake of the video, I'm only going to talk about market or limit. So market means it will try to give you a stock as close as possible to the on-screen price. So the current price is 1,215 pence. Remember this is pence, not pounds. So that's £12 and 15 pence approximately. So if you wanted to put a market order in, you just click on this and you could type in how much you want to invest. So £1. Because Trading 212 allows fractional shares, you don't have to have £12 and 15 pence. You can just put £1 or £2 or whatever you have in, and it'll give you the amount of shares that equates to. So in this case, it's approximately 0.082 shares. So you can review the order, and it gives you a summary there. So it tells you this is a market buy, tells you the value of the shares, £1, the number of shares that £1 buys you, the commission they're going to charge you. So because it's Trading 212, it's free. Some platforms will charge you, so make sure you get something that's either close to free or actually free, and it gives you the total there. So once you are happy with all that, you click on send order, and the system, because we're filming out of hours, so the market is closed for today, the system in the morning when the market is back open in 11 hours and 43 minutes will go looking for a stock worth the amount you put in there for as close as the screen price as possible. So if you wake up in the morning and the price has gone up to, say for example, just exaggerate a bit, 20,000 pence, so from £12.15 to £20 per share, the system will buy each share at that price. So to prevent this, so for example, you want to set an actual price, you can use a limit instead. And with the limit, you get to tell the system the maximum price you want to pay. So first you have to decide how many shares you want to invest, or how much you want to invest. So I use this slider there. So this is £1.12, for example, and that will give you 0.092 shares approximately based on the current price. But now we can say I don't want to pay 1,215 pence. I only want to pay 1,100 pence, for example. Okay, so that means that when the market opens in the morning, if the price stays at 12.15 or it goes higher than that, it won't execute. If it drops down to 1,100, then it'll execute, or lower than that. So you got the peace of mind of knowing that you're not going to pay more than you have told the system. Now, the opposite side of that, the disadvantage of that, of course, is that if the system doesn't execute but the price goes up massively, you may have missed out on that price increase. So say for example the market opens at 12.15 and you buy at 12.15, and then by the end of the day it's up to say 17-18 pounds. You've actually benefited from executing on a market order. If you set a limit order and it doesn't execute, you might have missed out on that performance. So you have to be comfortable with that, and you need to accept that. If it drops down and you buy at 1,100, happy days. Your quid's in then, aren't you? So if you're happy with that, you just click on review the order. Again, you get a summary, order type, limit buy, number of shares, the value of the shares you're buying. So this is the limit price, so that's the maximum price you're telling the system you want to pay. The expiration is set to never. That's because the market is shut at the moment. If the market were open, you'll have another option, which is till end of day. That means the system will keep trying to execute that order until the market closes. Now, if it doesn't execute, if that price is never hit on during the trading day, at the end of the day, it'll just kick you out and it just won't execute. So the money will go back onto your trading platform. It tells you the commission is free again, and then you get a total. So you can just send the buy order there. So similarly, because the market is shut, when it opens in 11 hours and 40 minutes, it'll execute. Now, bear in mind, you set a price lower than the current screen price, so it won't automatically execute the order. It will wait until the minimum price that you set is hit. If it doesn't hit, then it doesn't execute. So I hope that helps someone. So first of all, commodities are raw materials. These are things that we tend to need in daily life. So we're talking things like gold, silver, crops such as corn, wheat, or things like oil. You're talking things like lithium. Now people tend to invest in them because they help you balance out your portfolio. There are also things that people need on a day-to-day basis in just our daily lives. When the market is volatile, they can help stabilize. Obviously, they also move based on demand and things like weather and things like just geopolitical situations. So they're not always stable either. They tend to move as well, depending on what the underlying assets, what the demand is, or the different factors I just listed there as well. So we've talked about those kind of risks there. I've shown you how to find the different types of commodities, and also how to actually analyze them, see the performances, and ultimately how to invest in them. Now, if you like this and this helps you, make sure you share, make sure you like, and let me know below, are you invested in any commodities? Do you use paper assets like this? For example, an ETN tracking the price of gold or silver, or do you invest in physical commodities such as physical gold, or do you have physical livestock, or do you invest in coffee in some way? Comment below, let me know. Don't forget to also click on that notification button. That's very important. So when we make new videos, you'll be the first to get the notification. And best of all, make sure you share. Make sure you share to people who might be interested in diversifying their portfolios. Make sure that they get to see this and it might help somebody. As always, thank you very much for watching. Join me next time. It's a Roadman Investor.